Hey traders, welcome to Charts and Coffee. Happy Friday, everyone. Hope everyone's having a great week and finding opportunity, more importantly, controlling risk and what has been a very interesting week. It was just a week ago, basically Thursday, Friday, that we collectively were dealing with the regional bank concern, the SVB narrative, and then what looked to be possibly sort of a banking meltdown crisis type scenario. I don't know that I'd consider this at this point a full-on black swan, but certainly maybe a baby swan at this point. Taking a look at XLF and KRE, this is where, and of course, the sun cues right at Charts and Coffee. Oh my gosh. So if we take a look at XLE and KRE, XLF and KRE, we know that, take a peek here. This is the action from yesterday, Thursday the 16th. Certainly some nice leveling out in the XLF. Daily time frame is still obviously under pressure, but we're not in the same downtrend that we were on the 1 hour chart. So one of the things that we have talked about since I did the free video Tuesday, which was this 1 to 3 day time horizon, looking at a window of about 1 to 3 days to be able to handle the kind of volatility we're seeing, and shortening that short-term swing trading window also encourages us to look for opportunity and for clarity on the 1 hour time frame. And that's where, if you take a look, the 1 hour time frame could very well be not only today as we go into options expiration, as we go into end of quarter this month. You know, what is the environment in March? It's far more intense than just any end of month, right? Because as we wind down this month, and we could say starting with options expiration, now we're going to see money jockey around for position. And that's what makes this XLF timing so much more interesting. Imagine, having millions upon hundreds of millions of dollars of assets under management. You're a portfolio manager, a hedge fund manager, you're managing money of some sort. And now you're thinking to yourself, how do I either avoid or justify either trading, not trading, dumping, not dumping, adding, building a position, and financials or not? And that's what's going to make this corner of the markets, financials, XLF. Think JP Morgan, Berkshire, Bank of America, Citi, Wells, and KRE, your regional banks, where that SVB narrative really is. Are we going to see traders and investors start to take advantage of the fact that there does seem to be some sort of Federal Reserve, Treasury, FDIC backstop here? And that seems to be, right, 1 week removed where we're at. And why does this matter to us? Because financials are heavily weighted within the Dow and the S&P most notably. Of course, the Russell has a lot of high concentration of regional banks in terms of weighting. But the NASDAQ is sort of the corner of our world where, we can say to ourselves, do the broader markets, meaning all three, do they all respond to financials in the same way? That would be a negative Ghost Rider. They most definitely do not. So that's where we sit, gang. Quick little summary of what we've got going on this week. I'm sure we'll touch on it again as we go into the Raghee report next week. All right, so moving on to our first questions, and a good morning to our training room. Good morning to you all there. All right, first up is, all right, Jet Jockey. Good morning. As my husband calls me, Jet Jockey. Yeah, I wanted to discuss a trading strategy involving scaling in positions and its impact on the 25% profit and loss calculation. Sure. So let's tackle that little by little. Scaling in. You know this, Jet Jockey. We're going to find 2, maybe 3 levels. It could be 1 to 3, quite frankly. Aggro, moderate, conservative, that we will use as triggers, right? We know the old saying, no trigger, no trade. What does that mean? If there is no price level valid for the entry. We wait until it is. That's it. No trigger, no trade could be wait for your pitch. We all know the idea, right? Wait for your pitch. And that's what we're doing. In this case, I'm always waiting on 3 different pitches. I know there's 3 different pitches, slightly different places over the plate that can be levels from which I know as a general rule. Let me use my favorite image here. Where is he? Where's Ted? There we go. I know there's certain places over the plate that I'm going to be able to have a higher probability opportunity for a reward, and I'm going to have a better opportunity to control risk. Obviously, the latter, controlling risk, is the most important. So that's the scaling in. 3 levels at which we build a complete position: futures, stocks, options. In terms of its impact on the 25%, so once we know each level represents a different price. So that 25% is going to be applied individually to each level, which means just as I would scale out of a winner, T1, T2, T3, I'm going to scale out of losers. Think of it as almost stop loss 1, stop loss 2, stop loss 3, right? So as each leg loses that paper cut amount that I talk about, I will scale out. So I could be stopped out of an aggro leg of my position, but still be in the moderate and or conservative part. And that's how that impacts it. And what's interesting about that kind of approach is it presumes that different levels present different risk, right? And really, as long as we remember that different levels present different risk, we're going to position size differently. We're going to even sometimes consider micros instead of options. And I love to talk fluently about all of them. If we're trading the NASDAQ, QQQ puts and calls, MNQ micro, as well as the NQ itself. If you go to the S&P, it's even more choice. ES futures, MES micro futures, SPY ETF, SPX, right? Puts and calls. So it does get very interesting as we break that down. Speaking of the S&P, let's go take a peek at that here real quick before we move on to the next question. Gang, type them on in. Whatever symbol you might be looking at, time frame, what kind of setup are you looking at? Let me know. We'll break it down here on this Friday Charts and Coffee. All right, S&P, what do we have here? S&P, we're going to kick off the 1-hour chart with a bullish to neutral or neutral to bullish look, which means if we move down a little bit lower, I'm going to absolutely be open to a potential buy in the, right here, daily price movement range. All right. So that's what's really interesting in terms of the zone. That's my pitch, gang, right? So if I think about that gray zone, that's this. That's this red zone here on Ted's right strike zone. So ultimately, what I want to remember is until it gets down there, nothing necessarily for me to do. And a big part of this could be, if you're looking for maybe what could help tech, what could help the S&P, even the Dow disproportionately, it's this thing right here. It's XLK. If you've never thought about the impact of sectors on your trading, remember that every index is weighted heavily with a few specific sectors. And those few specific sectors are weighted heavily with a handful of specific stocks, right? So if I think about XLK, that's right here. This is Apple. This is Microsoft. By the way, it looks like we might be inheriting a 1-hour uptrend in both of these, which make these maybe an even better buy than XLK or even the NASDAQ. All right. So let's see what else we have here. Next up. So thank you for the question, Jet Jockey. And that kind of cracks open the market for us. So follow up to that question is I understand that this strategy might provide more flexibility in managing trades while minimizing the risk of reaching the P&L threshold too quickly. I don't know if I would say minimizing the risk of reaching the P&L threshold too quickly. That part I can't control. I love where your head's at, though, right? Managing both risk and time, which is something we have to think about between now and the 22nd, the FOMC meeting. But I love what you said there. It's the flexibility in managing trades. It's the ability for someone with a smaller account to say, oh, I can take the same trade. Absolutely, as someone with a larger account. You could be trading a $10,000 account or a $100,000 account, and you're going to apply the setups, and the risk in the same way. You might say, wait a minute, Rog, because it's not a dollar amount, it's a percentage. So it's very scalable. So thank you for that. Can we take a look at Tesla? Hey there, Praveen, of course, on the 1 hour. You bet. So we've got the daily time frame on the right. We've got the 1 hour time frame here on the left on this chart. And what we want to do here is start with structure. Tesla is in an uptrend on the 1 hour chart. This could absolutely be a surf the wave mean reversion approach. In terms of the daily is going to be tricky. I cannot actually do anything with the daily until, as you can see here, about 173.65 down to about 168.5. So DPMRs need a much further retracement before we can do anything there. But the trend on the 1 hour looks really good for a mean reversion. And I would say, Praveen, keep an eye on the NASDAQ, keep an eye on the S&P, keep an eye on Amazon for this narrative, because Amazon and Tesla are uniquely connected in that they're both part of this particular ETF, and that is the XLY consumer discretionary. All right. Okay. Question from our free trading room. Curious about my service. Oh, the Sector Secrets Mastery. Did I surf the wave yesterday? We've had a couple different, now you're talking about day trading wise. What we did yesterday, actually, let me bring up the notes here. Just bear with me here. As far as yesterday, I keep everything in notes. So as we trade together in the Sector Secrets Mastery, or even when I'm in the futures room. So yesterday we had the initial claims reaction of good news. Actually, you know what? Let me see if I can't detach this window. Actually, I can't. So I'll just walk you through what we had on the notes. What we did yesterday was the NASDAQ. We had, and yesterday was actually a tricky one for us on the short term. We had the markets move higher. So Netflix and Exxon were in play because of the risk appetite of the sigh of relief rally with banks. OPEC announced that they would stick with the production cuts. That made it a little tricky yesterday. A lot of interesting volatility. But from an intraday standpoint, we had buy limits in the NAS. We had buys in the bond market by way of buy limit orders. And let's see what else we did. I'm just scrolling through my notes here. And bonds, I'd have to say, were our big winner. The other market we were open to getting into were longs in the euro, which is to say we were looking for shorts in the dollar. So those are the three things we did yesterday as far as day trades in the mastery as well as the futures room. All right. Jay Cubes asks, never chase. My pleasure. My pleasure. I hope that gives you a little bit of an idea of what we were doing. I would like your thoughts on gold related investing. All right. So investing is going to take us to, say, a daily time frame, if not a weekly time frame. And the question is regarding gold. So how can we play gold? Gold futures, full size GC, micro MGC, GLD ETF, GDX, GDXJ. So now we start talking about miners and the gold related stocks. So let's start with the main market, and that's gold. So I would have to at least mention this, and this goes back to a lot of, what we covered in the DPMR masterclass. Some of you will probably remember this, because whether or not I have daily price movement ranges, right, which are a feature of this approach, the heart of this approach is still the structure of the market. And when we're neutral, I'm going to use the best kind of oscillating tool that I know, and that's that slow stochastic. And so here we have, take a peek. Now, this is a modified slow stochastic that we use with the class, but it's still a 21K 3D, gang. Neutral environment, signal, 200 propulsion. So that's the last time we had a daily time frame entry. So long term for me, J cubed puts me on a daily, puts me on a weekly, because long term means longer term time horizon in sort of my thinking. So if I'm incorrect on that, let me know. Now we either just get an uptrend because real yields continue to narrow, meaning or contract, meaning the difference between the long term, the nominal yield of a bond, minus the rate of inflation, that difference continues to narrow. When that difference narrows, gold moves higher. So bond and gold have much more of a tight relationship, more so than gold being perceived as a flight to safety, which it actually isn't. It's the reverberations from the bond market that are oftentimes a flight to safety that in turn, one position removed, if you will, affect gold. Gold would be beautiful buys off the DPMR at this point. That's all I really got in an environment where I'm lacking a trend. So there's no mean reversion. That's the 34 EMA wave, right? But I can buy the DPMR zones, especially when the grab candles are green, especially when our momentum from a multi-trend is green. That's a little bit of help there, right? So, and by the way, I mentioned the DPMR. That class has been taught and it's been recorded, and now you can access it. So if you took the class, gang, great time to review it before we start another day of live trading for the class. And it's still not too late to join me for the class, gang. So if you do want to check out the DPMRs and the class and what we're doing with things like gold, definitely do check that out at simplertrading.com/masterclass. All right, now what if I take this over to GLD? Same idea. I don't have a trend yet, but I can take advantage of those DPMRs. It's going to be key for me that if you're looking at GC, that it moves a lot like ZB, that bonds are moving higher and gold's, tagging along. Or if you're looking at GLD, if you want to go the ETF alternative and you want to play calls or buy the underlying ETF, it will be really important that GLD track a lot like TLT. And so to me, that's going to be really the key. And if you ask yourself, all right, what has TLT done? It's still very volatile. Obviously TLT, second only to probably the KRE and XLF, a lot of volatility with the flight to safety. I would still focus on the long bond, which is making a bet on, for the most part, lower yields. All right. So that's the way I look at gold, J cubed. That's the way that I'll look at gold. And then if I've got clarity on GLD or GC, then I can start saying to myself, okay, those stocks, gold miners, GDX, GDXJ, that are going to track likely with gold. Now, once I have a good pulse on the underlying commodity, can I play the stocks that move based on the commodity, much like I would crude oil and XLE or OIH or XOP. All right. Okay. Next up is what are my thoughts on ASO? Sure. What are my thoughts on ASO? All right. So if I'm looking at ASO here, what I have is and this is the daily time frame. So actually, let's bring in the 1 hour too. So what I have here is a little bit of a shaky uptrend, but am I surprised by this? No, gang, we've got a earnings play, right? So I am not going to ever make a bet on earnings, right? That to me is a kind of gamble type trade that I don't like to put on. It's a very binary, you're right or wrong, you're collecting premium. Take a look at it this way. There is this little move here on earnings, or think about 4 to 6 weeks before this date, right? The rally into earnings, 4 to 6 weeks before. I'd rather play the window 4 to 6 weeks before earnings, give earnings about 24 to 48 hours to settle down, and then play the post earnings environment and just get right back to work with what trend, if any, what is the market structure, what is that market trend that I now have. And then that's the window we're in with ASO, right? ASO. All right, gang. And just like that, I am out of time. So thank you as always for being a part of Charts and Coffee. I'm rocking the Kraken mug this morning, options expiration. It's been a heck of a week. I'm looking forward to seeing y'all for the Raghee Report on Sunday evening, 6 p.m. right here at the Simpler Trading YouTube channel or my YouTube channel at Raghee Horner. All right, gang, be good to each other. I will talk with you all soon. Thanks, Stacy. Yeah, smash that like button. Leave a comment, leave a question, leave a request right here. I do check them all, gang. I do check them all. Be good to each other. I'll talk with you soon.